This is GovExec Daily, where we bring you the federal stories that really matter. It's March 6th, 2023. I'm Ross John Fortuna. Inflation, housing prices, and other economic issues have had many federal employees, retirees, and service members concerned in recent years. The 6 million plus participants in the Thrift Savings Plan saw most funds drop in February after a positive January. The TSP has hundreds of billions of dollars under management, including huge, stable domestic funds. But our guest today suggests in a recent GovExec column that the International Fund is worth checking out. In an increasingly interconnected economic world, the iFund, he argues, is a way to diversify a TSP growth-oriented strategy. Lee Radcliffe is the author of the book TSP Investing Strategies, Building Wealth While Working for Uncle Sam. He has a post on our site right now headlined, "Don't Overlook This Unloved Fund When Investing in the TSP." After a short break, he'll join the podcast to talk about the TSP and the iFund.
Imagine what I call the magic data center. It operates anywhere in the world, even under the ocean. Surely, such a data center does not exist. We need to understand authentication is merely the enabler of authorization. How do we make this work in DDIL and TICAM environments? Join Ping Identity as we discuss this and more during the Emerging Technology and Modernization Summit.
The rocky financial environment of the last year has left some Thrift Savings Fund participants frustrated. Now, with the different options available for TSP participants, the International Fund might be overlooked as compared to the other funds. Lee Radcliffe is the author of the book TSP Investing Strategies, Building Wealth While Working for Uncle Sam. He has a post on our site right now headlined, "Don't Overlook This Unloved Fund When Investing in the TSP." He joins me now to talk about the TSP and the iFund. Welcome back to the program.
Thank you, Ross. It's great to be here.
So tell me a little bit about the iFund performance and what stands out to you.
Yeah, I think most of your listeners know that the iFund stands for the International Fund. It invests outside of the United States in companies that are listed in 21 countries. So the underlying index is the EAFE index, which stands for Europe, Australasia, and Far East. And those 21 countries, of the 21 countries, 15 are Europe, and then the others are Australia, Singapore, Israel, Japan, and a few others. I think a lot of people would be kind of surprised to know that Canada is not one of those, nor are countries like South Korea and other what are called emerging economies or developing economies. So among those 21 countries, there are 795 companies that are listed, and that goes from kind of the household names from Nestle and Toyota, Sony, those types of companies, to lesser known companies. That is more, there are more listed companies in the iFund compared to the C Fund, not as many as in the S Fund, which we can talk about later. But some of the exciting things for me when I look currently at the iFund compared to the C Fund and perhaps the S Fund is it seems to be a better deal when you look at the price to earnings. I was looking through the information sheets for each of the index funds earlier today, and the PDE for the iFund for the EAFE is 14 compared to around 19 for the C Fund. The S Fund is really high, 50 currently, so it's pretty high. It's also more diversified across the 21 countries like I talked about, but these are multinational corporations. So it's not like just, obviously, Sony isn't just operating in Japan. Toyota isn't just operating in Japan or Nestle in Europe. These are global companies, just like some of the top companies in the C Fund. But also they have better dividends. So again, looking at those information sheets, the iFund, the EAFE, gets about 3.1% of a dividend, which is pretty good compared to the C fund, the S&P 500, which it gets about 1.6. And again, this might change a little bit compared on what information data sheets you're looking at, your information source, Wall Street Journal versus Yahoo versus, iShares, which runs some ETFs related to that. But just in general, it seems like you're getting a pretty good deal when investing in the I fund currently.
C fund and the S fund.
Mm-hmm.
How do they compare to the I fund, particularly when it comes to performance, not just the stuff that you sort of just talked about, but sort of more broadly?
Well, the great thing in looking at the data that's presented on the TSP website, which a lot of us look at both, currently and holistically over the last 20 or so years, you look at the price action over those 20 years, and for the first 7 or 8 years when the I fund was created, if we go back, the I fund and the S fund were created in May of 2001. That's when participants could first invest in those funds compared to the C, G, and F funds, which were opened back in 1988. So relatively less apples to apples comparison over that time. But when we go back to that time frame, those first 7 or 8 years, the I fund actually outperformed the C fund and the S fund. And many longer term investors will remember those times as kind of that outperformance of the I fund, and things were pretty exciting about how that was going. The next 13 years, the subsequent 13 years between say 2010 and now, you had outperformance only 3 times. And that outperformance last year was a negative outperformance. So by that, I mean, it went down, it still went down like all the funds, but it went down less than the C fund and the S fund. But again, getting back to those fundamentals, I think the I fund is definitely worthy of maybe a small chunk of your investment currently. The C fund, it's always that mainstay, the large and medium cap stocks, US based stocks, which again, it's the same situation for US cap stocks as well, where they're investing internationally, just like the companies in the I fund. When you look at Starbucks or McDonald's or Ford or any of those companies, they're all operating internationally. So it's not like you have to invest in the I fund to get that international growth picture. But it's nice to again kind of diversify the types of companies that you're investing in and where you're investing and how they're operating. Now, the S fund, you asked about the S fund. That is based on the Dow Jones Total Market Completion Index, which is everything but the S&P 500. So that's quite a large fund. That's about 3,700 constituent companies, all US based, and those are growth oriented companies. You can go through the literature and see how smaller cap stocks perform compared to larger cap stocks during inflationary periods, as we're kind of seeing right now. How they might perform compared to the international listed companies like in the I fund. So you are going to get those differences in different inflationary periods or deflationary periods, depending on what we're looking at. But again, we're talking about currently. It's always interesting to look out the next 5-10 years over medium term periods as well to see how things might shape up macroeconomically.
In your post, you write that TSP participants have slowly decreased their allocations to the I fund. Why do you think that is? Is it just straight performance stuff?
Part of it is probably investment drift. So you might be putting the same amount into those investments, and TSP investors as a group might be putting the same amount. But because it's relatively, over, like I just said, the last 13 years, it has underperformed relative to the C and S fund. There might be some of that performance drift. I think more of it has to do with it's just not exciting anymore when compared to 15, 20 years ago when the I fund really was outperforming. So you kind of lose interest, investors lose interest. That might be part of the case, but also there is this now that the FRTIB has created the automatic enrollment into the L funds, which are a holistic investment vehicle, invests in all the 5 main funds. To be fair, most investors are going that route. So there are about 2.2 million participants who are just in the L fund. So, and you do get some good diversification there.
You mentioned inflation earlier. Does this affect your outlook on the iFund? Should it affect investors, TSP participants' outlook on the iFund?
That's really tough to say currently. I wouldn't be able to say one way or another. I think, for me, just personally looking at it, I feel like we're all in the same boat, whether we're sitting here in the United States or in Europe or in Asia. Inflation is the reality now in most major countries, most major regions. So it's just a matter of degree, how much is here versus in other countries. So because of that, I think most markets are adjusting to that. Most companies are adjusting to that. And hopefully we've seen some softening of those inflationary pressures. We'll see how the coming months, coming years pan out. But, I think sitting here now compared to 6 months ago or 8 months ago, I think many people feel like we're probably in a better place in terms of inflation than perhaps we expected. But, it's a month by month thing. It's tough to say.
So we'll end on this just to sort of bring forward some more hard to predict factors. The war in Ukraine, understandably, has upended a lot of the international finance system. How do you look at it and other international financial considerations when it comes to the short and the medium term future of the iFund?
Yeah, definitely. As a investor myself, I do like to look at the medium and longer term picture of things. Whether it is Ukraine, the war in Ukraine, whether it's the situation in general in Europe, internationally, even having to do with inflation. Talking about Ukraine, at some point, the war in Ukraine will be over. We will need to somehow rebuild Ukraine. Nobody knows what that will look like, how that will look like, who will pay for it. Those are all questions down the road, but there will be some rebuilding effort, and Europe is poised to help out with that and to be involved with that. And European companies will be central to that. Other things also that coming up, you have the Olympics. 2024 Olympics in Paris. So that's really exciting to think about. And there's going to be a lot of traveling related to that. And just people with the end of the pandemic lockdown and the last vestiges of the pandemic lockdown, especially in Asia, we're seeing a real boom in travel. And, that's both in emerging countries and developed countries. I think a lot more so than we expected. And that, to my mind, will only grow. And then, looking even further out, we have a high savings rate in the European Union compared to the United States. People are going to spend, and also nearshoring, and companies are going to be adjusting their supply chains as well. There are these thoughts about manufacturing centers, manufacturing clusters, also medical technology clusters, different technology clusters in Europe and the United States. So I think in the medium term, between now and 2030, 2035, there's going to be a lot of focus on that type of bringing supply chains closer to the developed markets.
And in the long term?
Long term, I'm positive on the outlook both for the United States and for developed countries especially, and hopefully emerging markets will be breaking into those developed country ranks as well. And 20, 30 years from now, you certainly can't bet against the United States. So continue investing in those CNS funds. Yeah, and I think long term, for international markets as well, I only think that things are going to get better for everybody involved.
The era of globalization is certainly not over. That seems to be one thing that we can count on. Lee, thanks so much for being on the show with us.
Thank you so much, Ross.
Thanks for listening to GovExec Daily. Our show was produced and hosted by me, Ross Opportunity. We want to thank Lee Radcliffe for joining the program. Our music is the song Signals by Catfish Dancing. Be sure to rate, review, and subscribe on Apple Podcasts or Google Podcasts or wherever you get your podcasts. You can email us any feedback at podcast@govexec.com or hit us up on Twitter @GovExec. Check us out on Facebook or LinkedIn by searching for Government Executive. We'd love to hear from you. We'll talk to you later.
Leadership development has never been more relevant, and skilled leaders are always in demand. For exceptional training for your own leaders, look no further than the Professional Development Academy. The Professional Development Academy is trusted by Colin Powell and other top leaders to address specific leadership needs and transfer proven expertise from the C-suite to frontline leaders. Our online programs help maximize employee potential to gain a competitive edge while still remaining flexible to allow for demanding schedules. Visit pdaleadership.com to learn more.